All right, good morning, everyone. Good morning, good morning. What's up, Russ? Always good to see you, man. All right, guys, quick sound check on this CPI Wednesday. Not much of a reaction just yet. It ain't pretty, but we've seen uglier. So, CPI report aside, just your friendly daily reminder we are kind of in a trendless market, guys. All right, May you had trend, June you had trend, a little bit of July. Ever since, we're just stuck in a big old box. So I'll show you the S&Ps here. Just very, very stuck. Now the scoreboard here, which mind you, the scoreboard's changing every day. So nobody really has an overwhelming edge. The Bulls got the edge, the Bears got the edge, all the back and forth. Just points towards a choppy market. So Bulls get 1 point, the Bears get 3. What that would imply is that in the context of the box, if things do lean a bit bearish, it's easier for a move towards the bottom end of that range. If the Bulls get the edge, a little bit easier for a push towards the top end. If they keep playing volleyball with it, then you're just stuck. If we then check the QQQ on the other hand, does hold up a lot better than the S&Ps. Bulls get 3 points, the Bears get 1. So you've got an S&P that's just, sloppy at best. You've got a QQQ trying to fight the good fight. To me, the most interesting one. The one that I think kind of tells the truth, so to say, is the RSP. QQQ's decent, we'll call it. The weighted index, the SPX, it's sloppy. The equal weighted index currently sets up for the perfect short. Big 3 squeeze, A+ setup. So that's your 500 stocks in the S&Ps, all with an equal weighting. There's no influence here on the RSP from a few heavily weighted tech stocks. So what this tells us right now is collectively, the market's not in great shape. More things lean a bit bearish than things leaning bullish. And if you go through a few charts, check out the industrials, utilities, healthcare, financials, even the semiconductors, even the big bad semis, leaving a little bit to be desired. Tells us we're not in a great market. Now, the few things that are performing better than the rest, that's your FANG stocks. It's Meta, Amazon, Netflix, Google, Microsoft. Up to this point, they've all done a really good job of trying to buck the trend, and they're holding up pretty good. Google has daily buy signals. Nothing to hate there. Amazon's got this beautiful 3-day squeeze. Daily squeeze just fired. There's a 2-day squeeze and then the 3-day. All right, the 3-day squeeze looks really bullish. So Amazon's in good standing. Meta's got a lot of squeezes. 2-hour, 4-hour, daily, 2-day, 3-day. Not too shabby. Microsoft. Daily squeeze just fired. And then check out the weekly. It could change by the end of the week. For now, we got a weekly squeeze buy signal. And then Netflix. Netflix not too shabby either. Netflix has daily buy signals, and so does Tesla. But then there's the biggest of them all, the Big Apple. And the Big Apple is not in good shape. under the 50, under the 21. Sell signals on every time frame except the weekly. So you kind of tie the pieces together. Healthcare does not look great. Industrials do not look great. Semiconductors do not look great. Utilities, transports, the financials are kind of lame. And then Apple. So then you take your Microsoft, Google, the Amazons, etc. They're trying to buck the trend against weakness throughout most of the market, and more importantly, weakness over here in Apple. And they're trying to buck the trend in the face of what continues to be a strong dollar. As long as the dollar is above that 21 EMA with a daily buy signal, it is a bit of an issue. So from a bigger picture perspective, guys, it doesn't mean I think the market's going to roll over and puke. It's in the cards. What I do think, though, it's going to be very difficult for both the S&P and the QQQ to trade higher from here and take out the highs with the current problems in the dollar and the current problems in Apple. Best case scenario for the market, Apple's back above 183, just kind of stabilizing itself. And then the dollar back under that daily 21. If those two things could actually happen, then I think from a swing trade perspective, it's probably easier to see things go higher. If those two things don't change, do be a bit cautious here to the upside. And then as far as open trades, we got one on both ends. We are short ADI. And here's the trickiness of being a swing trader right now. I can't ask for anything more. Beautiful daily squeeze. Under the 200. Sell signals on pretty much every time frame. In my book, it's the perfect short. In the right market, I think that trade works time and time and time again. As a swing trader right now, I don't have the confidence that we're in the perfect short everything kind of market. So you take the short, but you manage it tightly. You start to lose your signals, you probably want to hit the road. The market does break lower. My general thinking would be anything that looks like ADI, it's probably got a pretty good shot at giving you that flush. And then one group that, at least for now, does continue to look pretty good to the upside is the energy stocks and the oil stocks. So we're short ADI and we are long MRO. And MRO is the opposite of ADI. If I'm getting long, I can't ask for too much more. Squeeze and some buy signals. If the market allows for it, it's a great trade. If the market stays stuck in a box, it's a more difficult trade. So we got a long, we got a short, and then we'll see what's up here today, guys. Be nimble. Be nimble, be quick with it. There's a time and a place where, depending on your aggressiveness and your risk tolerance, there is a time and a place in the market where you can double your account in a few weeks without really being, stupidly aggressive. Then there's a time and a place where if you can crank out, 1.5% to 2.5% per week in this kind of back and forth, that's really good trading. The key is you got to know when to take the foot off the gas. Go from attack mode to, I'm just trying to stay loose. But all right, folks, any questions, any charts I want to take a look at? Throw them on over. See what you got. And my condolences to any New York Jets fans. Freaking brutal. I'm not even a Jets fan, but jeez. All right, we got BTU and a few more coming in. I do like BTU. We had gotten long last week. The daily buy signal actually never stuck. Yesterday closes with the official buy signal. But then check all this out. One thing to have a daily squeeze. Even better if you have a 2 hour, a 4 hour, a 2-day, a 3-day, and a weekly. Bunch of buy signals, yeah. BTU's a clean one. More importantly, if you can catch it in this neighborhood today, it's a good risk versus reward trade. The closer to the 21, the better. But I do like BTU. Evelyn, target for MRO. Gonna look for about 28 and change. 28-ish, 28.50. I think we'll ring the register. Try to keep it short and sweet. Brock has got Generac, HQY, and WCC. Generac could be more of a short. More importantly, I think it can be a painless short. Daily squeeze, daily sell signal. I would take that short off on a close back above the daily 200. So between yesterday's close and the daily 200, it's not too much. It's not too much risk. You could catch about a $6 move lower into the target. Maybe even a bit more. So Generac could be more of a short for now. And then HQY, that sets up nicely for a long. A plus setup on the daily chart. Got a bunch of lower time frame buy signals. You got a 2-day squeeze, a 3-day squeeze, a 2 hour, a 30-minute. So that is in good shape for a push higher. And then WCC. That would be a short for now, but take consideration to it probably tries to bounce down there at that daily 200. So the easy short might just be shorting it into that level. Les has got Roku. So structure versus momentum. Right now, the structure is fine. It's above the 200 SMA, it's above the 50, and it's above the 21 EMA. And those three moving averages are stacked on top of each other. So structure is good. The problem for now is momentum. They push it, they push it, they push it. They still haven't gotten that positive cross. They haven't ripped that above the zero line to the point where now momentum actually supports that daily squeeze firing long. The problem that can turn into, the poster child for that, is a name like AI. And keep in mind, guys, that momentum is built into our buy signals. So taking a look here at AI, the reason we never got a buy signal, indicator never told us to try to play that daily squeeze long, was because of that momentum. Structure was good. They never got momentum back above that zero line. So 1 failed breakout, 2 failed breakout, 3 failed breakout, 4. Then the bulls just kind of wave the white flag and the squeeze breaks short. A lot of examples of that. Apple's the same thing. Brand new daily squeeze. Try to break it out, never cross momentum. Down she goes. Same thing with NVIDIA. Right, this is a really big problem for NVIDIA. Momentum peaked back in June. It's been on the decline ever since. So since June, you've had, 1, 2, 3. You've had a handful of failed breakouts that never had the wind at their back. Even this push from 400 to 500 did not permanently fix that momentum issue. Makes it easier for NVIDIA to break lower than for it to continue to try to trend higher. So things to watch there for Roku. And let me jump over here to YouTube, see if we got any chart requests on the tubes. Alexis, MAR. So MAR, we're kind of seeing the same thing. You have this daily squeeze versus that daily squeeze. The daily squeeze back there in July, it printed with a fresh cross of momentum. So now the bulls are basically working with a fresh tank of gas. Look how easy it is for them to take higher. Take it higher when they've got that wind at their back. This actually reminds me of AI. Right? This looks a lot like AI. You have good trend. You have good structure. They're not getting that momentum cross. Doesn't mean the squeeze turns a corner and fires short. Just means it's going to be a bit tougher for it to fire long and give you that sustainable action you're looking for. So Kevin, I think, what's up, Kevin? Walmart is a beauty. Now it's a little extended here on that daily chart. So my preference would be try to buy it on a flush. But it's a beauty. Daily squeeze just fired. And where I think you would love to buy it on a dip is inside of that 2-day squeeze, which hasn't fired just yet. And then I believe there's a 3-day. The 3-day squeeze just fired. So really what I would look for is continuation into higher prices out of that 3-day squeeze. To work the entry for that continuation, just try to catch it on some sort of kickback. But I think Walmart looks really, really solid. Awakened Mind, good morning, crowd. Yes, there's a good example. Squeeze printed, fresh cross of momentum, off they go. Now, how come? Yeah, this is pretty good case study here. That squeeze fired long. That squeeze eventually fired short. Momentum crossed negative. Momentum crossed positive. That daily squeeze was initially setting up to fire long, and then they lost momentum. So that momentum cross, it's a big part of the timing. And then it looks like crowd's got a couple more squeezes. Very nice 3-day squeeze. And a very nice weekly squeeze. Yeah, guys. So as far as meta goes, it's meta versus the market. You want to make it more specific to tech? It's meta versus Apple. You get Apple back above the daily 21 EMA. So much easier for the Metas, the Microsofts, the Googles to rally. If Apple keeps giving up the goods, doesn't mean they can't rally. It's a lot tougher. A lot tougher. What we do know is there's a pretty good chance 30 to 60 days from now, all of the squeezes here have probably fired. Daily squeeze, the 2-day squeeze, the 3-day squeeze. For now, we take clues from both the signals and the market as to which way should those squeezes fire. Now, when I'm looking at meta here, I love all the squeezes, but they are neutral. The 3-day, the 2-day, the daily, they're neutral. So I've got the squeeze part of the equation, but I don't have the momentum, I don't have the structure to confidently say, hey, these should fire long, or hey, these should fire short. If they get that daily momentum cross, it becomes a bit of an easier call. All right, back over to the essentials room. Yeah, Robert, so for NVIDIA, the biggest issue is going to be momentum. They ran the stock 20% higher, and again, they dropped the ball. The bigger problem is we're failing to get bullish momentum on the daily chart in the context of a big 2-day squeeze. For what it's worth, that 2-day squeeze also lacks bullish momentum. And right now, the daily chart is not helping its case. Then you have your 3-day squeeze. The 3-day chart also has momentum problems. So now you've got this big nested squeeze, both of which are not poised to fire long. And then the time frames inside of them, the daily chart, the 4-hour chart, they're not in great shape either. So right now, that multi-time frame template does not support the 2-day or the 3-day squeeze trying to fire to the upside. Again, does not mean they fire short. Just means buying calls on Google that expire in 2 weeks, that might be a tough trade. You get the wind at your back, it's an easier trade. Yeah, Alex, bingo, man. Exactly. Alex said he doubled his IRA last time the indices had a big weekly squeeze. Like I've shown, like I've shown you guys. I took I flipped that 2,500 into 20, 25, 26,000. Out of that weekly squeeze. Like it does not get better than that. The fish are jumping in the boat. You've got like the maximum wind at your back. There's a huge plate of opportunity. Daily squeezes, 2-hour, 30-minute, 15-minute. And then we just kind of come to a screeching halt. So time to go for it, and then time to just keep the lights on, so to say. Russ wants to look at Mervel. It sets up nicely for a short. More importantly, risk versus reward. If you short it up here, you're shorting it closer to the exit than you are to the target. And that's what locks in a good risk versus reward versus shorting it down here at $53. Well, now you're closer to the target than you are to the exit. Less reward, more risk versus less risk, more reward. So yeah, that sets up for a short. David, AMD's not in great standing either. I continue to think at some point that wants to come down to that daily 200. Call it 95 buckaroos for now. AMD also has a lot of squeezes. The weekly, the 3-day, the 2-day, and the daily. As long as a daily squeeze has a sell signal, there's a better chance that squeeze breaks short. If the daily squeeze breaks short, that can have that domino effect and trigger the 2-day, the 3-day, etc. And then Oracle. Oracle got quite the spanking yesterday. Yeah, I don't have a trade here on Oracle for now. It looked really good going into the announcement, but earnings is tricky. Earnings is tricky. So personally, I'd probably just let that one be for now. Wait until it offers, something like that. Fed chucklehead. RTX short continuation. In the grand scheme of things, yeah, sure. Could definitely continue to trend lower. But in the here and now, it's a little extended. Here's a good way to look at it. If we change the Kentler channels to 2.5 ATR, yesterday you close way outside of negative 2.5 ATR. This might be closer to 3.5. Not even. So point being, it might continue to trend lower, but probabilities wise, it's kind of reaching an extension where typically it's either going to take a breather or get a decent bounce. Based on the structure and the signals, I think that bounce, that's the spot where we want to come in and look for the short. One of those things where getting short down here might work today, but over the course of 100 trades in a row, it's probably not going to be the best entry. So I think ideally try to catch that on the kickback. All right, let's see what else we got here, guys. So Jesus, for those of y'all with the indicators, I'm going to send those out probably early next week. I'll get that added to the indicator page. I got a little bit more tweaking to do, and then I got a couple other things I'm playing around with. But Charlie, to answer your question, once I get these dialed in, so we'll take a look at MRO. So once I get these dialed in, the blue line would be the upside target, and then the red line just lines up with the 21 EMA. Visually, there's our line in the sand. We might take exits before that move, before the break of the 21. But if we buy calls here, the absolute latest exit would be a break under that 21. So visually, what I'm looking for is something. I want to buy something like Dell. Dell's actually above the target, and then my line in the sand is all the way down here. I instead want to catch a name like BTU. If I buy calls today, I'm buying them closer to my exit than I am to my target. I've got my risk box, call it, and then I've got my reward box. I want that box to be about 2 times bigger than that bottom box. So visually, it'll plot our targets, but also visually, we kind of get a good sense of, am I chasing this, or am I buying that nice and tight to the 21? All right, let me put these back down to earth. Yeah, I agree, guys. I agree. Tequila. So here's where it's helpful. When I look at not tequila, when I look at Celsius, maybe some Celsius mixed with some tequila. When I look at Celsius, it's up here at the target. The ship is kind of sailed. If I can catch it on a pullback, then I've got something to work with. But good looking chart though. Good looking chart. Kirk, I'm glad you made some money on Walmart. Yeah, I took it off for break even. Market was sketching me out. Nicely done though. Nicely done. Yeah, RP. I did see that Kobe tribute from Joker. That was good stuff. I miss my man Kobe. My sister-in-law, who's Jaden's 18, so she's a young one. We were talking about basketball the other day, and I was telling her how I used to go to a lot of Celtics games. I was like, yeah, I saw LeBron, I saw Carmelo Anthony, Garnett, Ray Allen. She's like, well, did you ever see Kobe? Instant heartbreak. I was like, no, I did not. Stan, PLD. My only gripe with PLD, it's kind of like asking your significant other what they want for dinner. And guys and gals, we both do this. It ain't an exclusive thing. I ask my wife what she wants to eat for dinner. It's a whole bunch of I don't know. She asks me, same response. PLD does not know what it wants for dinner. Buy signals. Yeah, buy signals still sounds good. Actually, no. Sell signals. No, never mind. Buy signals. Right. Italian, Mexican, pizza, pasta. It's just a very, very confused one. Risk versus reward wise, though, yes, to your point, if you can short that right up under that 200 SMA, it is a really good risk versus reward. She just been a choppy one. Bit of a choppy one. So for ADI, we're looking for about a $1.70. And if we get, a $1.72, $1.71, I would take the trade off. Not a market where I really want to be greedy on longs or the shorts. So the ballpark, we kind of get that bad boy anywhere down here. I'll be a happy camper. Now, if we're in a huge downtrend, S&P's in a downtrend, whole market downtrending, probably look for a break of the lows. Right? You try to push that trade for a little bit more. I think in this market, you hit it, you take your paycheck, and you're off to the next one. Mac wants to look at PCAR. Give me a second, guys. Let me just make sure I'm not on the mic in the options room today. Nope. Day off. PCAR. So PCAR is another example like AI. It's actually kind of a mirror image of AI. Nice push, like really, really nice push. First pullback, brand new daily squeeze. Multiple failed breakout attempts. 1, 2, 3, 4. They haven't addressed momentum. So the current daily squeeze is nothing like the previous daily squeeze. The previous daily squeeze got the fresh cross. Full tank of gas for the bulls. Wind at their back. They haven't done that yet. If they can't do that, it either continues to chop or, like an AI, eventually the squeeze breaks short. So things to watch there, Mac. Okay, so good question. Good question on Royal Caribbean. So take ADI for example. Now, not to say the trade works, but ideally that's what I want it to all look like. Where I've got the daily squeeze, I've got my daily sell signal, but then everything inside that daily squeeze, the 4 hour, the 2 hour, 1 hour, 30-minute, 15-minute, they all print a sell signal as well. So a good example of that multi-time frame alignment, everything inside that daily squeeze is currently poised for a move lower. Now you get a name like RCL. The daily squeeze is still a valid short. What the lower time frames are telling you is pay attention. Right now, your lower time frames are not confirming, hey, let's break down right now. That's not what our signals should and will look like across those lower time frames when that daily squeeze is ready to fire short. Now, you can either take that as a heads up that you might get your signal to exit the trade. Right? They might break you back above that 21. Or you could say, hey, I don't like being short with an hourly buy signal. I don't like being short when the 30-minute chart is bullish. I'm going to take the trade off. Even though the daily chart is still valid, I'm going to take it off here because I don't like that action. So it's either a heads up or it's a reason to close the trade. I lean a bit more towards a heads up. If the label on the daily chart is still red, I'm going to try to be a little bit patient. But I never ever love a 1 hour or a 30-minute buy signal if I'm trying to see that daily squeeze break short. It's a thorn in my paw. A thorn in me paw. TDDHI. The family company. I hate to say it. I hate to short a Horton, but this Horton looks like a good short. Daily squeeze, bunch of sell signals. It's a nice, straightforward trade. Looking for a flush down towards 110-ish. Exit above that 21 EMA. It's got all the right colors. Yeah, Art, I'm with you, man. I am with you on that. It's kind of funny. I was sitting there yesterday like, man, what a long week it's been. I've had to be patient all week long. It's like, dude, it's Tuesday. The week is young. And yeah, Bert, I would see Generac as more of a short for now. I would see it as more of a short. But alrighty, y'all. Cash market going to open up in about 4 minutes here. So I'll let you go. And as always, we'll trying to think of the right word here. Discipline. There we go. We'll be disciplined traders until we have a bit more clarity, and then we can kind of up the ante on the aggressiveness. So be disciplined, focus on those base hits, and we'll see what's up here today, guys. As always, thank you for your time. Hope you found it helpful, and I'll talk to you all soon. Adios.